Hey, welcome back to Everyday Economics. This is the podcast that helps you understand the economic world happening around all of us. Everyday Economics is brought to you by the Center Square Newswire service. I'm Chris Krug, and I'm publisher of the Center Square. And Orphe Divounguy is my partner on the show. By the way, he's a PhD economist. Today is Monday, December 15th, 2025. And in this episode, we're going to talk about the Federal Reserve's decision to cut the rate. Dr. O, you wrote about this in your Everyday Economics column, which published, I believe it published Sunday, but it's available every Monday at thecentersquare.com. And no big surprise that the rate was going to be reduced. And it's now sitting, and it was reduced by 25 basis points. And now it's sitting between 3.5% and 3.75%. You see some issues existing in and around this decision, and I want to talk to you about them. So where, sir, would you like to start?
I mean, look, this week, the Fed is getting labor market data. It's going to be a bit of a mix of like October estimates and November. Remember that we just came out of a government shutdown and that kind of distorted data collection for the month of October. And we're also going to get the first kind of an inflation report, the CPI report for the month of November. And so I guess the big question is whether or not the rate cut last week was justified, right? There are those who believe that inflation, because inflation remains above target, the Fed, and that there was no official data, for the labor market, that perhaps the Fed should have kind of held and not cut, basically waiting to get more data, right? Before that critical move. There are those who are the one who believes that the Fed is behind the curve and should have cut by 50 basis points. And so 3 dissents last week show basically the Fed is divided, and there's more and more confusion about where the economy actually is and where it's headed.
So of the data that's starting to trickle in, I mean, yeah, we're going to get the consumer price index information dropped on us this week. That'll be interesting because we really haven't seen a whole lot of that in any, meaningful form since the government shut down, right? I mean, this data will start to be more current and hopefully more accurate. But what are you waiting to see? I mean, put yourself in the seat of a Federal Reserve governor for a minute, and what would you be looking for to better understand, to form your opinion about where the rate should go from here?
Well, I mean, look, it's clear that inflation remains above the 2% target, but that it's not accelerating as fast as people had anticipated, right? And basically it's coming in lower than expected so far.
Mm-hmm. And a lot of that fear was frankly stoked by the uncertainty of what tariffs might do.
Exactly.
Right?
Exactly.
Okay. And so, and it's not like we're at some point of conclusivity, but I mean, I think it's fair to say that over the arc of 2025, tariffs maybe had less impact on the economy than a lot of economists.
Well, not necessarily, right? Not necessarily, because there are offsetting factors, okay, right? So, goods prices have increased, goods inflation has accelerated, but there are offsetting factors like the fact that services has cooled, housing has cooled, right? And so I don't think it's fair to say that tariffs haven't had much of an impact. They have had an impact. It's pretty clear in the goods inflation story. It's just that there are other factors that are kind of mitigating that upward push in goods prices.
Well, don't misunderstand what I said. I mean, I think that there was largely I think it's not necessarily a fear among economists, but I think there's a fear among the general public, largely a fear of the unknown. I mean, we start thinking about like who's going to pay for, and the numbers were all over the board. I mean, at one point, tariffs against China were threatened at, I don't know, wasn't it 100% or more?
That's right.
I mean, anybody who's walked through Walmart and turned whatever it is that they're buying over and looked at where it was made might have a reason to think that, their prices, might have doubled on consumer staples.
That's right. And part of it is also like these businesses kind of absorbing some of the impact, right? And not being able to pass on the cost of tariffs to consumers. And so that is also part of the reason why we're not seeing the worst case scenarios, that were out there when this whole episode started. Right. That worst case scenario hasn't been realized. And so, so if I were in the committee, I would really be paying attention to the labor market. The labor market has cooled. The number of job openings relative to the number of unemployed has dropped, meaning the labor market is loose. Hiring rates are super low. Layoffs have started to move up a little bit. And you can really see the pain in the housing market. When you look at, metrics like sales relative to the flow of homes coming on the market, it's lower, much lower than it was before the pandemic. When you look at estimates of the total number of buyers in the market shopping at any given point in time, and you compare that to, inventory levels, a measure of market tightness, what you find is that the market is looser than it was before the pandemic, much looser now than it was before the pandemic. When you look at month supply is now higher than it was before the pandemic. What is month supply? Well, how many months it would take to basically get rid of all of the inventory that's currently on the market, right? It's higher than it was before the pandemic. So basically you have a labor market that is looser. You have a housing market that is looser. Sales volumes are hovering, at their lowest levels in years, right? Bouncing along the bottom since 2023, 2024, 25, home sales remain very low. They're moving a little bit higher now, but still, we're looking at 4.1 million home sales, existing home sales for the year, which is very low. Compare that to, 6.1 million home sales in 2021 at the peak of the housing boom, or even the 5.3 million home sales in 2019 before the pandemic, right? So big drop in activity there. And so all of those point to what? Well, they point to an economy that is increasingly under pressure, and potentially, they suggest that Fed policy is somewhat restrictive.
Well, I appreciate your thoughts as always. And I think we can call it good on our first episode that we're going to record today. We want to come back and specifically talk about jobs. And we also want to come back and isolate a conversation around the housing market. So if you're listening to us here on Monday or Tuesday, there's good things in store for the rest of the week. And, we're ready to have that conversation. So thanks as always, Dr. Rowe, for what you do. Make sure that you read Orphe's Everyday Economics column every Monday at the Center Square and listen what we have to say each weekend on the Center Square Radio Hour.